So, what do smart retirees do differently? They manage income with strategy, flexibility, and discipline. Here are three key principles that we use. Number one, separate short term and long term money. Smart retirees don't have all their assets exposed to market risk at the same time. They create buckets or segments. Short term cash for immediate income needs, mid-term assets that are conservative but still growing, and then finally, long-term growth assets that are allowed to ride out the market cycles. This way, when markets fall, you're not forced to sell stocks at a loss to meet next month's bills. You're drawing from safer, more stable sources instead. Hi, I'm Chris Hensley with Houston First Financial Group. Welcome back to Retirement in a Recession. This is episode 4 of an 8-part video series for pre-retirees and retirees who want to navigate today's economy with clarity and confidence. In the last episode, we tackled the myth of buy and hold and why it doesn't always serve you well once you reach retirement. Today, we're getting even more tactical. We're going to talk about something critical: how smart retirees manage their income during a recession. Because it's not just about what investments you pick, it's about how you build your retirement paycheck in a way that can weather volatility without forcing you to sell low. When you're in retirement, you are your own employer. Your investments have to create your income. But if the market's down and you're selling investments to create cash flow, you can permanently damage your portfolio's ability to last. It's like trying to live off of a fruit tree. If you pick too many branches during a drought, you're not losing this season's fruit, you're weakening the whole tree for the future. So, what do smart retirees do differently? They manage income with strategy, flexibility, and discipline. Here are three key principles that we use. Number one, separate short term and long term money. Smart retirees don't have all their assets exposed to market risk at the same time. They create buckets or segments. Short term cash for immediate income needs, mid-term assets that are conservative but still growing, and then finally, long-term growth assets that are allowed to ride out the market cycles. This way, when markets fall, you're not forced to sell stocks at a loss to meet next month's bills. You're drawing from safer, more stable sources instead. Number two, stay flexible with withdrawals using a guardrail approach. Rigid withdrawal strategies can backfire during a recession. Instead of pulling a fixed amount no matter what the market's doing, we recommend using a guardrail approach. What this means is you have a target withdrawal rate when markets are strong and guardrails in place that signal when to adjust withdrawals slightly downward during a rough market. These guardrails act like bumpers. They keep your retirement income on track, helping you avoid overreacting during market downturns while still allowing you to participate in recoveries. It's not about guessing the market. It's about preparing for volatility and having a plan to adjust when needed. Number three, proactively manage risk throughout retirement. At Houston First Financial Group, we believe retirement planning shouldn't be passive. We actively monitor market conditions. We adjust allocations based on economic data, not emotion. We prioritize portfolio resilience during downturns and opportunity during recovery. The goal isn't just to survive recession. It's to stay positioned for long-term success while maintaining consistent income. Because in retirement, it's not about beating the market. It's about making sure your plan keeps working year after year. In a recession, smart retirees focus first on income stability, then on growth. When the market rebounds, which it eventually does, the retirees who managed wisely are still standing strong and ready to benefit. In the next episode, we're going to shift gears and talk about another often overlooked challenge: healthcare costs during a recession. Because when inflation's high and healthcare keeps getting more expensive, having the wrong assumptions about medical costs can seriously derail even the best laid retirement plans. If you're wondering whether your current income strategy is built to handle this kind of volatility, let's talk. Go to HoustonFirstFinancialGroup.com and schedule your retirement risk review today. We'll walk you through your current plan and see if you're positioned for stability, even if the economy keeps shifting under our feet. I'm Chris Hensley, and this was episode 4 of Retirement in a Recession. I'll see you in episode 5.